Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So we'll go ahead and clear this off for us here. And we'll take a look. That initial signal, we draw some just very basic horizontal lines for us here. You get a move. Now remember I say I like to buy enough time, and here's a good example why. You know, this particular trend on a daily chart took place over about a month and a half time frame. So for this particular time, you want to make sure, you know, if you buy, remember my criteria was 2 to 6 months of time that I like to buy. So if you buy 2 months, you have plenty of time for a particular trend like this. You don't have to worry about running out of time and that option expiring on you. So that's no longer a concern when you make sure to buy enough time up front. And as you can see here, you know, you get a move going from 64, 64 and a half, all the way on up to 72. You know, that's just a fantastic move that takes place there. You know, and if you're looking out in terms of buying options, remember if you're trying to buy at least 2/3 intrinsic value on that particular option, you still can buy an option that's $2.50, $3, somewhere in that range on a typical priced EUI option. Lots of opportunities there for you. You know, if you buy an option that say it's around $2.50, you're going to have a delta of somewhere around 70. So you buy an option at $2.50, you get a delta of 70, you're catching a $7 price move. Do the math. You're making over $4 on that particular trade, only putting up $2.50. I like that risk-reward profile there, personally. Now remember, I do see some questions coming through here. You know, this particular indicator that we're talking about here, the %R, we're not using it the way it was originally used. So if you're not familiar with this BigTrends methodology, we're not looking for potential reversals here. We're looking for these acceleration points. So these sweet spots that take place on %R tells us that there's a breakout in the trend. As you can see that it lines up perfectly. If we go over to the next standpoint, we get a lot of confirmed price action that takes place above 80 there. Looks what happens during the similar time frame. Now, what happens here with this indicator during this segment right here? If we go down from here and take a look at %R, as you can see, you've reached the top, at least short term, on the EUI in November heading into December. It really started actually in October through November, just kind of hesitated that level, could not make higher highs, and then ultimately started to fall off. What is our % doing? Well, it's broken back down below the 80 and then continued to fall further from there. So that's why I've written over it a little bit, but that's why right here we would have had our buy exit that would have taken place. If I clear this off, you know, these pullbacks that take place in some of these bigger bullish trends, that's when we go ahead and exit the trade because we don't want to be a part of that. Then we'll patiently wait for the next strong breakout, the strong trend, and move on from there. So we have two, as you can see, just by using the rules of this particular indicator, profitable bull signals that take place here, using our rules for %R with our setup and our confirmation. From there, remember that the ultimate trading plan and the best indicators allow you to profit on both sides, so both on the bull and the bear side. Well, look, we get a short signal that takes place here. And although we went down and tested that 200-day moving average, and then rallied and bounced back off of that significantly higher, at the same time, this would have been a very profitable trade for you. And really the majority of that price action happens during that sweet spot that takes place where you get your ADX rising, you get your percent R that stays below 20 there. That's when everything comes together. Now, one other thing I do want to point out to you here is a lot of options traders in general, but especially currency options traders, will kind of get lulled into a trend and really not manage the trade. What you want to do when you enter into a trade is set some profit targets for yourself. And then from there you can be able to tighten your stops. So some of the rules typically like to follow, and I'll type this up here for us, is once you have a position that reaches a 30% winner, I move my stop to break even. So what am I doing there? I'm locking in that particular trade to, at the worst case scenario, I'm not going to lose any money. I'm going to be at a break-even situation. So I've taken my risk capital off the table, protecting it with that stop. Once I get to 60% gain, I don't exit the trade yet. I move my stop to that 30% threshold. So you're progressively managing your risk. Now, you know, people like to do it by looking at some of the key support and resistance levels, and that works. You know, everybody needs to have your own strategy, but what you need to make sure that you do is protect your assets when you're trading. You don't want to give up unnecessary profits. Sometimes you're going to have to do that, but more often than not, you want to make sure that you're trying to protect your profits as much as you can, okay? So that sell signal that took place there towards the end of the year would have been a very nice profitable one for us. Then as you can see, percent R is telling us that we're kind of back in a range from there. But then we get another buy signal that takes place in late January on into the early March. Now, for those of you who are also stock options traders, I'll ask you a question. Can you see here when we reach the second top? I'll clear this off. You can pretty clearly draw a line right here and say that it was a double top that took place here in the EUI. Okay, and looking at it from a longer term perspective, which is what I like to do, trading from daily charts, it's a little easier to see some of that taking place there. So you already would have known going into early March that this 80 level is going to be a key resistance level. And obviously one of two things are going to happen. It's either going to hold and reverse back lower, or it's going to break through and accelerate higher. Obviously it held, but look at the time frame when it held and where we received our buy exit. If you look at your calendars there, it's right around the March 9th lows for the stock market, where the stock market started to rally.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.